Hi everyone, in this video I'm going to cover the 15-minute and 4-hour time frame Elliott wave scenarios on Bitcoin, starting on the 15-minute time frame where price has touched the 886, which gives us a lot of information. The 886 is a Fibonacci taken from this high to this low, and what it means is that this structure to the downside is now a low probability wave 1 for an impulse down, 1, 2, 3, 4, 5 continuation. Reason is that the 886 is a very rare target for a wave 2. It is more common for a wave B or a wave X or other corrective structures, but that means that the probabilities at the moment locally on the 15-minute are higher to take out this high and as a bare minimum at least continue ranging for more clarity later. Now in this range, however, an area of interest that I have to the downside, which is still untouched, is between 78.2 and 78.6K. In that area, we have a daily naked point of control, as you can see, a daily as well, just below, and we also have the point of control of this week so far, which arguably is also the point of control of basically this range. Now below this point of control, you can see the value area low here sitting at 77.2K, which is in confluence, one could say, with this support resistance area. So that would be a secondary area that I did not have on my chart as a box, but it is a level that I do at least keep in mind. Now to the upside, we then have this resistance at 83.3K to 84K, which is interesting because with the information we have here, one of the scenarios that then comes to mind is a WXY double zigzag. And that's mainly because of the start here. You can see that this structure up is a very three-wavy structure to the upside. If we want to be very bullish, and we want this to be the low of a big move to the downside since the all-time high, and we look for much higher prices, we want to count impulsive structures to the upside, which basically means you want to see a wave 1, 2, 3, 4, 5, which we didn't get, right? Because we never got a 4 and a 5. Price move down, overlap with wave 1, which is not allowed in an impulse. Then you have to start looking for a multi 1, 2, 1, 2, 1, 2, and eventually you want the wave 3 to the upside. But if this is a 1, 2, 1, 2, right, then this wave 2 compared to the second wave 1, right, is over 4 times longer in time, which does reduce probabilities. And side note, if this is a 1, 2, 1, 2, right, then this has to be like another wave 1. However, this structure to the upside is a low probability impulsive structure because of the overlap. You have to think about a diagonal, right? A potential diagonal here. 1, 2, 3, 4, 5, correction, hops, wave 3 up. The issue is that if this is your wave 4, 1, 2, 3, 4, 5 in a diagonal, 4 touch the lower trend line of the channel, which invalidates a contracting diagonal. And contracting diagonals are a lot more common than expanding structures. I didn't check all the measurements for an expanding structure. It's just rare, so I'm not really interested. So it's higher probabilities that this is not a multi-1-2, so lower probabilities for a multi-1-2 here. And then you have a diagonal structure. That's your final one, where you then need a wave 1, right? You need a 2, you need a 3, a 4, and a 5, right? So a 5-wave structure, and then preferably, of course, contracting. Then you finish an impulse, or at least a diagonal, which is an impulsive structure here. You look for a 3-wave retracement and then continuation. But this only becomes interesting to look at if we at least finish like a wave 4, right? So we still have a lot of time. That is why at the moment, corrective structures have a higher probability, and therefore also probabilities at the moment are higher to still take out this low at a later stage, unless we form a diagonal and have the opportunity to continue moving towards the upside, right? Now, a corrective structure then that I keep an eye on is the WXY. So we have A, B, C, and W. We have a range in a wave X, right? Whatever X can be or is, we have support to the downside. And it's interesting for me, if we hit support, I will be observing the reaction. And based on what I see, I might open a position to look for a potential Y, which then has to be a 3-wave zigzag to the upside. Reaching that 83K is then the target area. So the resistance that we have to the upside, where the weekly naked point of control at 83.5K is an important level on the chart. Now, an invalidation, or it's not an invalidation, but something that really lowers probabilities for a WXY double zigzag is the 0.7 fib taken from the start to the end of W at 76.5K. You don't want price to hit that level, right? It's no problem to touch support or move down here to this secondary support that we have, but you don't want to see the 0.7 touched. Now, with this information, let's then go to the 4-hour time frame. Because now we know that the probabilities at the moment, based on the local analysis, is higher to still take out this low, as long as we do not have a diagonal to the upside locally, 1, 2, 3, 4, 5, correction, we can look for continuation. But it will take a while. There's no reason at the moment to think that's a high probability. We can't count an impulse, and a multi-1-2 starts to be very awkward and just doesn't really add up nicely. So corrective structures do look at the moment a bit better. Now, the 2 4-hour time frame scenarios where this can work is, first of all, there we go again, the WXY double zigzag, right? Everyone, their dog, grandma, your mom will probably know about this scenario by now. So it's an ABCW, you have your X and you look for an ABC down in a wave Y. Wherever you put X, put it over there, it doesn't matter. You're going to count a 3-wave structure to the downside. That's your wave 1. Look for a 3-wave 2. 83K is an interesting area of resistance. And just to give you a little bit of context, above 83, there's still some more resistance, but I just like to keep an eye on that weekly naked point of control. But you're going to be looking for a wave 2, then a 3, 4, 5 to the downside. So in this case, you look for 2 more lows over here, then a 3-wave move up in B and another move down in C to reach your target area for Y, which is 64K to 50.2K. Now, with regards to support to the downside, of course, we found support on the 76K box. Very nice, bit of a bounce. Next area of support down here is this blue box between 67.7 and 68.9K. I have to say, however, that, or by the way, that between the low here and this box, we do at least have the golden pocket on a daily time frame taken from this low to the all-time high, right? 49K to the all-time high. And of course, we have this support resistance area with the previous range or previous all-time high, you could even say. Now, the other scenario that I have is this diagonal, which actually is a little bit more bullish. So you then have a wave 1, a 2, 3, 4, 5. And this wave 4 is then that WXY structure. And then you still look for a wave 5 to the downside, right? Now, in this particular scenario, this area at 83 can provide very interesting resistance, right? You don't want price to move above this level. 1 second, preparing it for you guys. So the invalidation for this scenario is price moving all the way here to like 89, right? So in other words, moving above these highs and diagonal becomes a little bit tricky. And also the other diagonal I showed earlier. But yeah, WXY 4, then look for a wave 5 to the downside, keeping an eye on that golden pocket I just showed, as well as the 68K, right? And then we look for price to move up. I think the general idea, what you get, I suppose, is that if we put them both on the chart, it will be maybe a little bit messy. But what you can at least envision here is that we've had a big move down and we're looking at least for a bit of a bounce to the upside. Of course, we have a little bounce locally, which is nice, but you can see at least a wave B to the upside. The potential is that you end 5 and you get a bigger bounce towards the upside. So from a swing perspective, it does start to be more interesting to look for longs. Of course, your short should be taken higher, right? From a swing perspective, it's a bet. I mean, you do you. It's not bad, not good, depends on your plan. But for me, at least, it's not a great area to short for swings. I'm happy to short locally and whatever, but it's more interesting to start looking for a bit of a bounce and a bit of signs of strength as well. Now, this diagonal, of course, then very, very interesting, and support for 5 is the same as the previous scenario. This dotted line has lower probabilities now because of the structure locally. The reason this one was here, right, as well as the bullish scenario, which is not on my chart, or a wave C. Bullish scenario was we finished and up we go. Alternatively was a W, A, B, C flat, and then a wave Y, right? Those were very alternative scenarios, never had the highest probabilities, but they required an impulse down locally, as explained, lower probabilities, this is impulsive. So that therefore leaves you basically these two structures at the moment on a 4-hour time frame. Yep. Then we go to the news. We have some news this week, Wednesday, Thursday, Friday. All the times are Central European time zone. Make sure you trade safe, can increase the volatility. And I guess you do have a pretty good idea of what the probabilities are and what we're looking for. So currently on the 4-hour time frame, the probabilities are higher to see another low, this one over here, right? But on the 15-minute time frame, if we then zoom in, right, then because of the 886 touch, the probabilities, right, are higher to take out the high, that one there, and at a bare minimum, continue ranging. Right? And then at a later stage, we get some more information. Now, for me, the important support to the downside, and honestly, just something that I'm waiting for, I'm a very patient trader, I just wait for my levels to be hit and then take it from there, is this area here around 78.5K. If price can make it down here, which would be very nice, I will be observing the reaction, right? If we get a nice 5-wave up, 3-wave correction, very, very nice. If we have bullish market structure with bullish CVDs, very, very nice, right? So those are a couple of things that I will keep an eye on. Do we fail to hold this? I'll look for the next area around 77.2-ish K, right? But let's first see if price can get to the blue box and then take it from there. With regards to resistance, the most important area on the chart is the 83K area of resistance. It is this blue box. Keep that one in mind if we do move towards the upside. So that being said, I hope that this video was helpful or valuable to you. Please check out the CVD indicator video, the best indicator out there in my opinion, or the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.